Hi, I'm David Stein of Money for the Rest of Us. This is a channel on money, investing in the economy, and today we're talking about emerging markets value. Emerging markets value has been incredibly hyped over time. Let me show you some projections from GMO. This is Jeremy Grantham, and they have long-term been very bullish on emerging markets value. 9.8% expected real return. This is before inflation. So they're anticipating over the next 7 years returns of potentially 12, 13% for emerging markets. Now, GMO has been very bullish on emerging markets for a long time. This is for 7 years looking out from 2013. In this case, they didn't break out value separately, but a 5.7% real return before inflation. If we look at the most recent 7-year period, so this would be June 2016 through June 2023, a 4% real return. So when we think about emerging markets value, what exactly is the value component? How do we even describe that? So one of the indexes is the MSCI Emerging Markets Value Index. It's made up of over 800 stocks, 24 emerging market countries, and they determine value by several metrics. So they look at the book value to price ratio, which is the inverse of the price to book, one of the metrics we show on Asset Camp. They look at 12-month forward earnings yield, which is the expected earnings divided by price, which is the inverse of the forward PE, and we'll look at some of those valuations. And they look at the dividend yield, and they take the universe, divide it, those that are the cheapest. They have other metrics for growth, and then they come up with emerging markets value. So those are the expectations. Double-digit type returns. How has it done? Well, let's go to Asset Camp and look at our historical returns of emerging markets value. So we'll go here to the historical return drivers. This is as of the end of October. And we'll take a look at, let's select emerging markets. We'll take emerging markets growth and emerging markets value. In fact, let's also include China. China is a big component of emerging markets, about 30%. Let's compare their historical returns over the past decade, and they have fallen well short of GMO's expectations. Why is that? This is an attribution. We can see this is the average dividend yield over the past 10 years. And this is the earnings growth on a nominal basis. And this is where emerging markets value have really fallen short. China, a big component, has had negative earnings growth over the past decade. We can see that in the case of emerging markets value, hardly any earnings growth. The valuation, about the same, so that didn't have a big impact. The currency did, though. So the US dollar strengthened relative to emerging market currencies over the past decade, and that cost about 3 percentage points in return. But even if the dollar had stayed even, we're still looking at like a 3% return for stocks over the past decade for emerging markets value. And that is incredibly disappointing. If we think about it going forward, though, let's just rank, this is expected stock market returns. We're going to rank by dividend yield. What has the highest dividend yield? This is the lowest, this is the highest, and we see emerging markets value is the third highest in the world of 4.7%. And that would be our starting expectation and looking out for expected returns. Emerging markets Latin America has an even higher dividend yield, and that's mostly due to Brazil and the energy sector. And then we have Australia is also very high. What, though, drove those low earnings growth? Certainly China had an impact, but let's also think about it from a sector standpoint. Let's look at this chart. This is a sector attribution. And in here, we're looking at, this goes from 2013 through the end of 2023, so October, so 10 years. This is on a sector basis. These are MSCI ACWI sector, so the global stock market, so not just emerging markets, but we can see a huge discrepancy. These are annualized returns. Technology has done 17% annualized. Emerging markets value does not have a whole lot in tech. And if we look at a couple ETFs that we'll look at in emerging markets value space, they tend to have more in energy, which has done 3.8%, materials 6.4%, but really the growth sectors and financials is another area. If we look at emerging markets, that there's a fair amount of exposure to financials. So it's been a combination. This lackluster earnings growth has been a focus on because of China and also because an overweight to energy and materials. And with commodities selling off over the past decade, if we had shown a return of commodities over the past decade, we would see commodities have actually, even though they've done well the past couple of years, they've trailed over the past decade. In fact, had negative returns. And so the sector hasn't been great. The China, we recently did an episode on Money for the Rest of Us on the problem with China. And their work age, the average age of their workforce those that are in the working age, that is slowing. There's fewer people in that age group, and that has contributed. And a big component of China's companies are state-owned enterprises, which have been not terribly efficient. So there's some structural headwinds when it comes to China. Now, how do we invest in emerging markets value? Let's take a look at some ways to do that. Here is some charts by Y charts. First, let's go over here. In Asset Camp, we include some recommended ETFs in the different areas. And so emerging markets value, if we look here, there's the Advantage Emerging Markets Value ETF. The ticker is AVES. And then the Dimensional Emerging Markets Value ETF, DFEV. So those are straight up emerging market value ETFs. The DFA is a newer fund, but it mimics a long-term institutional mutual fund that DFA has had in the emerging markets value space. So let's go back over here and look at some performance of emerging markets value. We can see, well, we don't really have 10 years, but we do have it for this Wisdom Tree Emerging Markets High Dividend ETF. The ticker there is DEM. This is in our Money for the Rest of Us Plus model portfolios. This is the membership community that we have, premium membership community for Money for the Rest of Us. It's also in my personal portfolio. It's done okay over the past 3 years when we've had it in our portfolio. But 10 years, again, because of slower earnings growth, this fund has not really, it's done better than the overall emerging markets value index, but it still hasn't been great. And then the DFA Emerging Markets Value Fund has done 2.8% annualized. We know why if we take a look at, for example, the Dimensional Emerging Markets Value ETF, which mimics the fund. And if we just look at how it's allocated, it would be over here under portfolios. So again, I mentioned financial services, basic materials. They tend to be overweight energy, and those are sectors that have lagged. And then in this case, they're underweight technology, but they actually have 15% in technology. If we look at it from a country weight, 25% in China, 17% India, 17% in Taiwan. If we go over then to Asset Camp, and let's focus again on the historical returns. Again, 0.4% annualized for emerging markets value. What about expected returns though? So let's go back to rank everybody by classification. Let's put in emerging markets value, emerging markets growth. Let's compare, and we'll start with the current dividend yield. Again, 4.7% for emerging markets value. If we assume just the average 5-year earnings growth over time, and let's just assume that. So on emerging markets value has generally historically on a 5-year basis had earnings growth of 4%. And then if we just assume that the PE shifts to the long-term average from 10.1 to 12.8, that would add 2.4% return. And that, this is on a nominal basis, would get us close to where GMO expects emerging markets value to be. It's sort of that double digit. And now theirs was based on the nominal return that was back over here. So this was 9.8% real return. And so if we assume inflation of 3%, we're at about a 12 to 13% return. Back here over at Asset Camp, the expected stock market returns were at 11%. If we get the PE back to 12.8, if the PE stays the same, then we're looking at a potential return over the next decade of 8.7% for emerging markets. We've shared a couple ways to invest. I mentioned that we invest with DEM, and if we, I'll make sure I'm not blocking the screen here, so let me take my head out of there. So over here on DEM, what's fascinating about this ETF is look at the dividend yield at 10.5%. And that's pretty crazy when you think about that allocation. And partly it's driven by 21% in energy. But look at a country perspective, they've had 16% in Brazil. So where does that leave us for emerging markets? We shared some ways to invest. Again, we have 3 ETFs, the Avantis Emerging Markets Value ETF, tickers AVES, Wisdom Tree Emerging Markets High Dividend ETF, DEM, and the Dimensional Emerging Markets Value ETF. If we think about, well, should we invest? It's a tough choice. When we think about earnings growth hasn't been great over the past decade, but the dividend yield is close to 5%, and some ETFs had dividend yields of 10%. If we could just get some modest earnings growth of 4%, perhaps get a turnaround in China, get a rebound in commodities, we're looking at potentially a 9 to 12% annualized return for emerging markets value. I have some exposure in my portfolio, just a small part, but if you're looking for an area that is disappointed but has a high dividend yield and with some reasonable expectations, we could get some positive, almost double-digit returns, maybe actually double digits, then check out Emerging Markets Value. If you have any questions on it, you can put those in the comments below. Also, in the notes below, we'll have a link so you can sign up for our weekly email newsletter at Money for the Rest of Us. And there's also a link to Asset Camp if you want to learn about this tool to harness index fund investing or ETFs. You can do the historical attribution. You can do expected returns. And we didn't really look at even some of the valuations in emerging markets. Let me focus on one other chart just so you can see what this looks like. So here, let's go to emerging markets value. That was the wrong screen. We want to go over here. Let's just look at emerging markets value and the valuation. So if we look at the price to earnings ratio right now, it's at 13.5. If we do look at on a forward basis, oh, that's not the wrong one. Hang on. Emerging markets value is what we want. Because remember, we were at 10.1. We want to get up to the average of 12.8. We have this outlier here that kind of distorts the chart a little bit. But if we look at on a forward price to earnings ratio basis, again, we're at 8.3. The average is 9.4. And so there is some precedent to emerging markets value getting more attractive in the future if we just get back to the average. So again, any comments, questions below? Check out Asset Camp at assetcamp.com. Sign up for our newsletter. Thanks for watching.